Rahul, let me come to you because, you had expressed disappointment the day the GST Council made the announcement of a 5% tax rate but without input tax credit. What we're seeing right now in our Twitter timelines are flooded with irate consumers saying, look, restaurants are not passing on the benefit of the reduced tax to GST. While some can argue that the notification only came into effect from 15th, midnight to 14th actually, that restaurants will take a little bit of time to pass on the benefit, but how much time? When can we expect a reduction, if at all, as far as bills are concerned?
Hi, Shereen. So if you look at it, I don't know where this is going, because at the end of the day, there are two kinds of benefit. One's a benefit which you get in the menu price, which actually comes in when you have an ITC. So if there's an ITC benefit, that benefit automatically goes to the consumer in the form of a menu price. The second is what the consumer pays as the final tax or the GST. So earlier, the AC restaurant had an 18% and the non-AC had a 12%. That's the rate you pay when you see your bill. So if you have a 100 rupee product, you pay 18 or 12 depending on where you're sitting.
Sure.
So first and foremost, to bring a rationalization and taking off the discrimination between AC and non-AC is perfect. We will love it, because at the end of the day, there can't be an AC and non-AC in today's world.
Right.
Now coming to a 5% headline rate, it is 5%. So all the point of sales are 5%. So if my bill is 100 rupees or 120 rupees, you're going to give a 5% GST on it. So I don't know where this is coming from, where the restaurants have actually not given the percentage decrease. It is a percentage decrease. 18 and 12 has become 5% in every point of sale. There could be some restaurants in a day, they've not been able to update their point of sales, because if you look at it, you're supposed to go midnight.
Again, Rahul, I'm only going by, I don't have any first-hand experience. I'm only going by the complaints that are coming in on Twitter. Some seem to suggest that the base price has in fact been hiked in order to offset the GST rate reduction.
Yes, it has. Sure. So there's a very valid reason. If you look at arithmetic in a very simple way, what is the GST? GST is the destination-based tax. It works on a value chain basis. It does three things. There are three triggers or three drivers for GST. First and foremost, it subsumes all the taxes, multiple taxes. So if you have multiple taxes, like in the previous regime, we had VAT to pay to the state and we had service tax to pay to the central. Right. That's subsumed into one direct tax now, what is called a GST tax, or a single digit tax. The second is it avoids tax on tax, or what we call cascading of tax. You don't pay tax over a tax and tax. So that's what it does. That's what GST does. The third thing it does is it encourages people to pay taxes, because when I'm going to get an input, I would like to get a bill which has got a tax in it, because I'm going to get an input on it. Otherwise, people will start evading taxes.
Now, I understand the logic. I understand the logic. So you're actually acknowledging the fact that because input tax credit has been done away with, we will in fact see a move up on the base price. Yeah, because now the consumer unfortunately has to pay a tax over his tax. Okay. There is a tax which you didn't get an input, then who pays for? Now government is going to be charging tax over a tax. It's like double taxation. So what is what is the average quantum that you expect, at least for an upscale retail chain, the Starbucks, McDonald's of the world? What kind of an increase should we expect?
Sure. There are three kinds of players in this market. There's an unorganized sector who never paid tax, probably never even had a bill. We're not talking about that. We're talking about the organized sector. It's divided into three sectors. One's a chain which pays royalty. So if you've got a royalty-based business where you're paying royalty to your principal or to your franchisor, then there is a extra service because you're paying royalty over it. So there's a tax to it. Then there is a person who's a standalone restaurant, does not pay royalty, owns the brand, but pays rent. There's a different input tax there. Then there is a person, a hotel, or let's say a standalone restaurant who does not pay a rent. The rent is the largest component here. What that person does is he's actually sitting on his own property. So obviously when you say own property, you're not going to pay rent on that. The basic maths in a restaurant is 35% goes into product, 35 goes into services, 20 goes into staff, and 10% is your margin. That's how restaurants work worldwide. So the 35% service is the only one which is debatable. The 35% product is going to be 35%. The service, if you're going to have a rented place, you will have a huge amount of rent to pay and a service tax on a GST on that. But if you have your own property, you don't have to pay GST on it.
All right.
It's divided based on that.
Okay.
So it would vary anywhere between 4% to 10%.
4% to 10%. Okay. ITC. So that's the kind of increase that you see on base price because of the input tax credit being done away with. Adarsh, Shetty, A, do you agree with this? And B, Are you now worried? Because we're clearly seeing a split in the restaurant sector, in the hospitality sector on this issue. Do you agree with what we've just heard there from Rahul? What are your members, for instance, telling you about the possibility of bringing prices down?
See, I partly agree with Singh, but partly I would not, because the price coming down, if not coming down, if it remains the same also, I think with the 18% to 5%, I don't think so that could be a problem. Today, what we have to understand is because of the 18 and 12% slabs, we had a major problem for the takeaways
Sure.
and for the
that's a thing of the past. Adarsh, that is a thing of the past. Let's talk about today. 18 and 12 doesn't exist. It's 5 across the board. So let's talk about today.
Yeah. Today our first priority today my first priority is to make sure that the business that I've lost, I have to get back that business. I have to make sure that that business comes to me. That 30% hit that I have taken because of the wrong policies, I have to make sure that it comes back to me. So today my prices are constant. I have rolled back 18 to 12 to 5, and I think probably in the city of Mumbai, under our organization, more than 90% of the restaurants are today serving the people with a smile on 5%. So I am very happy that my consumer and my guests are happy with this, and they are happy with this situation, because we are also seeing that the business has lost. We are trying to, first priority of ours is to regain the lost ground that we had in the 3-4 months that have gone by. So I agree there with Singh that probably this was a discriminatory part that was done earlier. It need to be rectified, and the government has rectified. And
so have your members,
I think there
Adarsh, have your members already moved towards price cuts?
Consumer is benefit.
Have your members already moved towards a price cut?
Yeah, definitely. Yes. Today, right from the November 15th, more than 90% of our members have already implemented the 5% on their
and they're not facing the challenge that Rahul was talking about on input tax credit.
100 plus 5.
So how are they offsetting the problems and challenges that Rahul was talking about on input tax credit?
Input tax credit, what Rahul is saying is, he's saying it's a model where, you know, the tax on rentals, and rentals, I do agree there it's an issue, but right now our priority is to make sure that we make sure that the business that we lost, we try to gain that loss. When it comes to when later on, we will see what to do about that. But
does that mean you're going to hike prices later on?
Said they're not going to stop
are you suggesting that you'll hike prices later on?
Mathematics. Yeah.
No. It doesn't mean that. It doesn't mean that we're going to hike prices later on. It means we go to the government, explain to the government, make the government understand. This government has been understanding it.
Right.
This government knows the pulse of the common man.
Okay.
We want to go back to the government, make them understand if they need to be understood about it.
I think
we are very sure
even though
that
Rahul
probably in
and
time to come,
Adarsh,
they will definitely do the
you
needful.
might be trying to sound different, but I think essentially you're both still pretty much on the same page. Mr. Shah, let me come to you. You've heard what both the restaurateurs here on the program have to say. And we talked about this. We talked about the challenges of doing away with the input tax credit. There is a consumer backlash already, which I'm sure the government is going to take cognizance of, especially in the context of this whole anti-pricing movement. What are the challenges that you foresee here, sir?
Firstly, I think there's a fundamental debate which is misunderstood in terms of the demarcation between the tax which you have to levy and the price that you charge. Now, in terms of the tax, the mandate of the law is that if a rate of tax is prescribed, you charge it. And therefore, if we now have a 5% rate, that is what the law obliges you to charge.
Yeah.
This is what the two panelists are saying, we are charging 5%. That, however, is not the focus of the government. The government is saying is the price that you charge the customer on which you levy the tax, has that price effectively come down?
Yeah.
And there are two factors why they think the price should come down. One, the tax rate has gone down, and two, if you've had a certain benefit in terms of the credit mechanism.
Right.
Now at 5% here, there is no benefit from the credit mechanism because the credit mechanism is actually denied to you.
Yeah.
The question therefore is, government is focused on price and industry is continuously saying, leave price aside, I'm charging 5% as tax. And if I charge 5% as tax as opposed to 18, in any case, the total spend of a customer is lesser.
Yeah.
And I think therefore you are having two completely different dialogues. Government with a focus on price and industry on a focus saying the consumer is paying less because the tax has come from 18 to 5. And I don't think, you know, this debate can sort of continue with each of them focused on two completely separate issues. I mean, if you looked at the equivalence principle, what was the taxation before now? You paid a VAT, you paid a service tax. You effectively paid 5% of VAT in composition, you paid 6% service tax. At 11%, you got credit of services, you didn't get credit of excisable goods or VAT. The other option is you paid 20%, and if you paid 20%, you got the credit in terms of VAT and you got the credit in terms of service tax.
Right.
So if you looked at equivalence, the principle was at 11% you could take the credit on services. The closest equivalence rate would have been to take them to 12 and give them some credit on services, because any situation of burning out credit is not ideal from a GST perspective. So the way I see it right now is both the parties, and I think quite passionately, are talking about two completely different things and they need to build a bridge there, because government's focus is price, namely the base value on which you will levy the tax, whereas industry says 18 to 5 itself is sufficient. The other thing which troubled me a little is we have the anti-profiteering mechanism. It's a very robust mechanism and it's just going to begin. But government has in a way prejudged this prior to that whole mechanism coming into play. But the heart of this is consumers and the ones who are writing into you are not going to get into all the niceties of tax.
No, they're not.
They are looking at that price point as opposed to the tax point to say, has that gone down? And if we don't serve them on that, I think there will still be disillusionment and there will still be some outcry.
There will be disillusionment and outcry because we're looking at two different things. Pratik, I'm going to give you the final say. We're completely out of time, but very quickly, this is going to be a challenge, and I think that this debate is not over by a long shot.
Debate is not over at all. Very simply, mathematically, it was 100 plus 18 earlier. If input credit loss is 5, you have to make it 105 plus 5, right? So unless you make the price from 100 to 112, you don't reach 118. Even if you take Rahul's point, the maximum input credit loss is 10%, whereas the benefit is 13%. So therefore, definitely there is a case for some reduction for all the players. I mean, for smaller players, the reduction could be more. The bigger players, the reduction could be less because they have more of input credit loss. Having said that, I think it is unfair for the government to assume that everything will happen overnight. Everybody will have to be a little more patient, and I would also recommend that the government issues a circular or instruction on this, because today we have seen a lot of authorities going to restaurants and asking for information about pre-GST and post-GST, which I don't think is really required. I mean, there is already a mechanism that is established in the law, and we all need to respect that. So some instruction very quickly on this would be helpful. Well,
we hope that North Block is listening, and we do see that circular out. But Rahul, Adarsh, Pratik and Mr. Shah, appreciate you joining us here on CNBC TV18 to help us understand how to actually read what is happening when it comes to your restaurant bill.